and tulikuwa tuna manipulate into this daily fair value gap. And as you can see kama hapa hivi unaona hakukuwa na CRT on the opposing end ya kutufanya tutafute sales. So ideally we just looked for buys off of this zone, and we had a pretty nice reaction off of this fair value gap. Price ilikuwa inaenda bullish and tukakuwa pushed na some news. So I want to show you guys how you could have traded it, and nionyeshe tu stuff kiasi. So hii ndo CRT, this is the CRT, this is what a CRT is, this is how you can trade a CRT. Kitu ya kwanza una mark out your drawn liquidity for sales. Drawn liquidity ya sales ilikuwa this hourly fair value gap. Unaweza cheki price went so bullish, ikaenda juu, ikaenda so bullish with volume, leaving this imbalance hapa hivi. So buyers walikama wakaenda bullish on Tuesday. They went bullish on Tuesday, wakitarget this highs hapa hivi. So they were targeting these highs, so wakaenda alafu wakafika DOL yako. So sellers wakaingilia hapa hivi, pia kuna trendline liquidity hapa hivi juu, so wakakuja wakatake out this trendline liquidity, and basically their drawn liquidity would have been this daily fair value gap. So hapa hivi kulikuwa na daily fair value gap, daily FVG, which is your higher time frame PDRA, premium and discount array. So premium and discount zone, premium and discount array. So that's just it. So tukakuwa na a retrace bullish, tukakuwa na this retrace hapo hivi into this fair value gap. So mnaweza cheki price ilikuwa ina play around this zone, ikajaribu kwenda bullish ikakataa. So what ideally tuka trade on Thursday was a retrace to this place. I think unaweza ipata pale kwa chart. So we looked for price to come and manipulate into this. Tulikuwa tunatafuta, tulichukua buys tukafika hadi hapa, alafu pasha katupea sells from hapa hivi hadi hapa chini. So we had this, tukachukua this sells to this drawn liquidity hapa hivi chini, to draw liquidity onto this higher time frame PDRA, which is our daily fair value gap. So on Friday, ideally what we would have done was look for buys off of this zone, and as you can see kuna kitu inaitwa consequent encroachment. Sijui kama nyi wase mmeipitia, but ideally at 50% of this fair value gap buyers wakaingia in after tumechukua zile buys za asubuhi from Yemen alitutumia pia sales asubuhi, tukachukua tukafika hapa hivi, tukachukua buys from hapa hivi. So ideally hapa kuna structures mbili. We have bullish structure in that price is on a bullish trend. Price inatengeneza higher lows, higher highs, higher lows, ina retrace, inatengeneza new higher low, inatengeneza new high, inatengeneza new higher low. So ideally what we wanted price to do was to make a new high hapa hivi kwa to this candle range high. Hii ndio itakuwa candle range high yetu. So tulikuwa nataka kutengeneza a new high juu price on the higher time frame inaendelea tu kwenda bullish, inajaribu ku stay bullish, inajaribu ku change its state of delivery to bullish after being bearish for a long time. Unaweza cheki tumekuwa bearish for a while. Tumekuwa bearish for 37 days, and we've been recovering bullish for 16 days. So ideally tungetafuta two buys off of this zone, and tukakuwa na hii CRT. So tukakuwa na a setup. We had this setup. We wanted price to come and retest above this daily fair value gap, so ikakam ikateka out this low hapa hivi, this low inside this fair gap, alafu hapa kuna this 50% consequent encroachment of this higher time frame PDRA. So this is the 50% zone katikati ya fair gap. So kuna this theory whereby price ikifika 50% over fair gap over PDRA, kuna kitu inaitwa standard deviation. I don't know if you guys have come across it, but standard deviation inasema our say juu price inaendelea kwenda bullish at 50%, utakama retrace 50%, alafu wale wasa ku bottom tick na top tick wateka entries zao hapa hivi, and then wataget any high hapa hivi. So that's basically it. So after tumekuwa na hii reaction, this would have been your turtle soup. Our sweep, our sign to reverse bullish, to reverse to the upside, to reverse bullish, or to reverse to the upside. So in turtle soup basically ni ya sweep. Unapata hawa ni sellers, these are sellers, and as sellers are trying to draw liquidity, kuna pali watafika wa take profit. So ideally wakisha take profits, bulls wanaingia hapa hivi, which wanaitanga a turtle soup. So as people are taking profit from sellers wanakuwa weak, sellers wanaanza ku exit the market, and this would have been your sign, or your sign to reverse your bearish bias to a bullish bias off of this turtle soup, or this sweep, or this lower time frame. Kulikuwa na this lower time frame V-shaped recovery, and ideally sisi tukachukua buys off of this zone. This was our zone. So this is the first presented fair value gap on the 5-minute time frame. First presented fair value gap, and nataka ku emphasize on this just during this Gmeet. They could emphasize on this fair value gap. So price may take out liquidity at these zones to strip out this swing low on the lower time frame. This would have been your swing low, and tumeshachukua liquidity out of this one, and price ika reverse to the upside, reverse bullish to the upside. Cheki, this is a really big move to the upside. This is a really big move, and along this move price ijakuwa price haikukuwa ina fill this first presented fair value gap, and ideally our entry point yetu ilikuwa this zone. So tulichukua longs off of this zone tukitarget hydro's liquidity. Our first drawn liquidity was this high, and as you can see hapa hivi kuna relatively cool highs at his zone, and I want to emphasize on this feature, this value inaformiwa immediately after price imechukua liquidity off of a swing low, ama any place yote price imechukua liquidity, kutakuwa na this first fair value gap inakuwa formed immediately after that sweep. And ideally it does not mean that your fair value gap itakuwa formed during a session start ama session end, juu many times price ina take decision at any time during the session. Unaweza pata 2 hours into New York session ndo price itaanza kusonga. So that first presented fair value gap after price imechukua sweep, imechukua liquidity from the opposing end, hiyo ndo tuta focus on. And ideally our first presented fair value gap on the 5-minute time frame with this, on the 5-minute time frame. And as you can see, ukizoom in utanotice kuna fair value gap ingine imeformiwa. Unaweza cheki this in overlap, so it does not count as a fair value gap, and utapata kuna this massive volume. Hii volume ni mob, around 70 pips, hiyo ni volume mob. So ideally this pia hii ina signal a reversal to the upside. What do you do in this case? What do you do in the case that price imekupea this structure, imekupea this this first presented farewell gap? In most cases we wait for a retrace, and hapo ndo penye market maker model ina come in. Kuna this is my second base model, the market maker model. So kwa market maker model kuna kuna what we call a low risk buy ama a low risk sell. Low risk buy or sell. And low risk buy or low risk sell is what I like to call the first presented fair value gap. Hiyo nimejua tu leo, and but it's after studying it for a while, and I know that's what it is. So on the market maker model, acha nionyeshe market maker model hapa penye iko. Kuna this engineered liquidities on the higher time frame. We have this is our first liquidity. This is our first zone of liquidity. A previous day high. So previous day high, una mark engineered liquidity. So in engineered liquidity. And kuna this accumulation. Kuna this tiny accumulation. Kuna this tiny accumulation hapa hivi. Kuna also this tiny accumulation. Na kuna another tiny accumulation hapa hivi. So I want us to focus on all these accumulations, and nionyeshe venye market maker model ina come about this engineered liquidities. Hizi accumulations zinakonga in engineered liquidity, hizi zote ni engineered liquidities. Just a minute. Hizi zote ni engineered liquidities, engineered zones of liquidity. And ideally, even though market maker model inakaa, yeah. So utapata uko na this sort of structure. You have engineered liquidity, uko na obvious drawn liquidity kama this previous day high or candle range high. Previous day high, tray markout. You have this previous day high or your candle range high, and you have this liquidity zones ama liquidity pools zenye zinakonga mostly, in most cases utapata ziko na relatively equal highs. So what do you do in this case? Kazi yako ni kutake profits off of those zones of liquidity, and price on the market maker model itafanyaje? Ita engineer liquidity, itakam ifail ku close above his zone, alafu irudi chini, itarudi chini, alafu ita find a reason, a genuine reason to come back to this high. Hapa kuna daily high. These are daily high, I think. This on Tuesday, Wednesday, yeah. These are daily high. So price is bullish. As you can see, price iko bullish, yeah. And other fundamentals ilitusaidia pia kufika hizo. Sikuwa nafikiri ita hit that quickly, but price is bullish. So generally your bias is bullish, and price hapa hivi imekam, haiku take out any low hapa hivi. So unaweza cheki hapa hivi kuna those equal lows hapa hivi, but price imekataa ku take out any lows hapa hivi. But you have this drawn liquidities hapa hivi, you have your daily high hapa hivi, and uko na engineered liquidity, uko na relatively equal lows on the lower side of your chart. So what do you do in this case? Unangoja any of these zones iko taken out. You have your higher time frame PDRA, and you want to see how price reacts off of this zone, and price imereact bullish, alafu ikakupea this first presented fair value gap low risk buy low risk sell. Low risk sell. So what do you do in this case? Unatafuta entry. Entry yako itakuwa just above this first presented fair value gap low risk buy. So uko na this fair value gap yenye ideally ita hold buys juu market makers wanafanya nini? Market makers wanatafuta reason to hunt higher liquidity. So what do they do? Wanakuja hapa hivi, wanaongeza buys hapa hivi, so wanaweka do hapa hivi, wameweka do yao hapa hivi. Ideally they've placed their money on this fair value gap. That's basically what the low risk buy inamaanisha. Wanataka wamereact bullish, wakaonyesha yeah, we want to come in already. Tunataka kuingia kwa market, tunataka ku take control over the markets for the next session, the next 1 hour, the next 2 hours, 4 hours, any. And kuna obviously this drones on liquidity, kuna all this liquidity yenye imekuwa hapa hivi, yenye imekuwa engineered hapa hivi. Tuseme kuna seller aliingia hapa hivi, hapa hii high imekuwa swept na kuna seller ako hapo hivyo na ameka stop loss yake hapo hivyo, akifikiria price itairudi hapo, so stop loss yake itakuwa hapo hivyo. So kuna pia do hapa hivi, kuna do ya seller hapa hivi yenye tunadai kuendea. So we want to go for pesa ya seller yenye iko hapo hivyo, stop loss yake iko hapo hivyo, which mean price ikirudi to that zone atakuwa liquidated. Hiyo do inaingia kwa market kama that, if that makes sense. Hii price ikirudi hapa hivi na stop loss yako iko hapo hivi, hiyo do inarudi kwa market. Do yako inaenda kutoka from your portfolio into the markets. So basically what they do, they know hizi zones zote ziko na liquidity. Hizi zote ni equal highs, all those, hizi zote perfect equal highs za ku draw liquidity off of. And sasa juu do yao iko hapo hivi, they've placed their money and they want to target liquidity. Ideally what they'll do, watatarget nini? So watatarget hizi obvious draws on liquidity, daily high. Above this daily high kuna sellers wameweka do yao hapo hivi, kuna sellers wameweka stop losses zao hapo hivi, wanaendelea for sales na market inaendelea kwenda bullish. So hawa watakuwa taken out and hiyo do ingi kwa market. In this other daily high kuna sellers waliingia sales, waliingilia sales zao hapa hivi, waliingilia sales zao kwa hii daily high, alafu ukaona kuna this massive rejection, kuna this massive drawdown, kuna this massive pullback to the downside. So hapa hivi kuna sellers. Ideally pia how sellers unaweza check hadi price tu inataka tu kufika tu hapo hivyo, a week to place na ichukue liquidity yote iko hapo hivyo. So ideally market makers wakishaeka do yao hapa hivi, wanataka price in the bullish off of this zone. They want price to go up, to go to the upside. Kind of makes sense. And kazi hii fair value gap ni nini? Kazi hii fair value gap ni to anchor those buys. Yani place ya kuingilia buys, entry ya market maker ya buy itakuwa this first presented fair value gap, this low risk buy. Hapa ndo penye anataka kuingilia markets akitarget those draws on liquidity. And basically that's what the market maker is about. You have a buyer and you have a seller. Seller ameengineer liquidity, ametengeneza liquidity, ameweka stop losses zake in place, and kuna buyer anataka kuingia akitarget those liquidity. Ndio maana inaitwa market maker. Market maker in the sense that the market maker wants to hunt liquidity on the opposing end of the market. That's it. So kuna all this engineered liquidity. Kama sisi our first take profit ilikuwa this high up hivi. Ndio ilikuwa our first drawn liquidity. This high up hivi. And on the higher time frame we had draws on liquidity to this candle range high up hivi. We had draws on liquidity to this opposing end of this previous day high ama candle range high. And tukachukua buys off of hapa hivi. We took buys off of this first presented fair value gap on the 5 minute time frame. So tukachukua buys, tukaweka entry yetu hapo hivi chini, tukaweka stop loss hapo hivyo, and then tukatarget hapo hivi. This was basically our first um this was basically our first trade. Ilikuwa around 200 pips here, and tuka draw liquidity to these zones. But on the higher time frame, tulikuwa na these buyers, tulikuwa na these other buyers. We had these buyers on the higher time frame. On the higher time frame tulikuwa na these buyers. So ideally on Friday nilikuwa tunataka ifike hapo hivyo. So we took buys, tukaendelea kuchukua buys, tukitake profits hadi tukafika hapa hivi. But hapa hivi price ikapump. Kulikuwa na news, kulikuwa na some news, so price ikapump, take out sellers wenye wako hapa hivi. And ideally market maker model ni nini? Price may take out liquidity. Let me show you. Price may take out liquidity on a certain point on the charts at a certain time, and ikatengeneza sort of a dish like structure, a reversal structure, kitu inakaa hivi, kitu inashikilia price from not going outside the kitu. Unaweza chiki at most of the times price inakunga tu basically inside hii this dish like structure, which signals what basically in a signal strong bullish movements ama strong reversal movements. On the daily chart ama the two candles here tunge trade hadi hapa hivi. So ideally your TP would have been hapa hivi. All these relatively equal highs in his hapa hivi. Hii na hii ni equal highs. These are relatively equal highs, ziko karibu sana, so those are equal highs. These and these are relatively equal highs. As si kitu complicated, easy mbili ni relatively equal highs. Easy. These are relatively equal highs. Yeah. So ideally what you want to do is take a buy off of the first presented fair value gap that forms after sweeping liquidity, or the first presented fair value gap that forms after the market gives you a signal to reverse from the previous move to a new move. Market inataka kutoka from this bearish structure and continue this short-term bearish reversal and try to continue going upwards. Kulikuwa pia na conferences zingine hapa hivi. Kulikuwa na tulitumia pia Fibonacci. Tulikuwa nataka price reacts bearish, ikuje retrace 50%. Kuna kitu something about consequent encroachment yenye inadai kwa show. Unaona kama this is a true move, kama bulls really want to control the next move in the markets. As you can see, price imereact, imekuja, tuko na these conferences, tuko na this first presented fair value gap or a low risk buy, tuko na this reversal on the 15-minute time frame. I think iko clearer. Kuna this reversal to the upside, and kuna this 50% retrace of this move, of this initial move. Ukienda pale kwa chart, angalia tu 50% retrace of the initial move, utapata I think some few notes on it. If price really wants to go bullish, and it will need some market structure stuff. If price really wants to go bullish after this move to the upside, it'll retrace up, it'll retrace at least 50% to the downside of this initial move, alafu ndo ile to the upside targeting higher draws on liquidity, which your higher draws on liquidity zitakuwa hizi ma highs ndio zitakuwa your higher draws on liquidity, hizi highs zote. So ideally kama wewe ni short term trader unge trade to this hadi hapo hivyo, but kama ulikuwa una swing unge trade hadi hapo hivi. And this 50% move ideally inakuanga kitu kama a confirmation that yes, we want to add more buyers to this initial move. Tunataka kuongeza buyers, tunataka kuongeza do yetu hapa hivi kwa market. Tunataka ku tunataka kubuy, tunataka kuongeza do yetu kwa market, do to control market. Tukuwe na a stronger say in the market. So buyers may come in. So tuka retrace 50% into this zone na confluences za Friday zilikuwa fiti. We had 50% retrace. We are bouncing off of this daily fair value gap, tuna bounce. We have this first represented fair value gap on the 5 minutes, our low risk buy, na tumeretrace 50% of this Fibonacci. 50% Fibonacci ni the golden zone. Mzachiki iko marked out in yellow. In yellow meaning golden zone ni the most probable zone for price to reverse alafu iende bullish, alafu utatarget kama unatumia Fibonacci unge target hadi hii high. This is the most probable high to be taken out on the Fibonacci. Unge target your first high ingekuwa this zone, alafu the next zone ingekuwa that one. Yeah, that's just basically it. I don't know if kuna any msee akona question, kama uko na any insight you'd like to share with us, unaweza uliza tu hapo kwa chat, and yeah, I can clarify a bit more on it tukiendelea.